Hey everybody, welcome to Young Money Investments. In today's video, we are going to be talking about how to know when to get out of a stock and take profits in your swing trade. Oftentimes we get into a stock and we see it continually run up. We think that it's more bullish than what we had initially anticipated and end up holding the stock a little bit too long and giving back some of our gains. In today's video, I'm going to be talking about the technical indicators that I use to personally help me to avoid that holding the bag and losing profits, and how I've been able to consistently swing trade and make a profit using these specific strategies, all today on Young Money Investments. All right, you guys, so it's been a while since I've actually done a video on swing trading, right? I think I've done a lot of videos recently on shorting. I've done videos on like options, but I have not done a swing trade video. I know I gotta be better on that. But in today's video, we're gonna be talking about some of the technical analysis tools that I use in order to actually be profitable and consistently swing trade. Let's face it, right now is July. The markets in the penny stock market are pretty dry. A lot of the liquidity is gone, and the only way to really, in my opinion, consistently make profit is through swing trading in the current market conditions. These are some tools that have helped me to be a consistent swing trader and profitable, and I want to share those 4 strategies with you right now. Strategy number 1 is going to be selling at the top of the price channel that you have created. Now I'm going to show that to you in just 1 second, but what I want to explain with this particular strategy that I use is you're not going to always sell at the absolute highest peak. You're going to sell 90% of the time at some of the highest peaks. But this does not guarantee you that the stock is not going to continue to run. And I'm going to use a few other tools to explain why this isn't always the sure sign that you need to get out, but oftentimes it is the time that I get out. And the reason for that is, although I may leave a few percentage points on the table, maybe 3-4% on the table, it is keeping the profits that I initially wanted to get in my swing trade. And what I mean by that is I always have a range of where I want to get in, where I want to get out, where I have basically a mental stop loss, and where I need to take profits. Anything above that is kind of nice. And I do imply a strategy where sometimes I'll take half of my position off, I'll take a quarter of my position off, I'll let the rest of it ride, etc., etc. But let's talk about selling at the top of the channel. All right, guys, so as you can see here on the chart, we are looking at ticker symbol AAPL. Apple is one of the largest companies. I believe next to Microsoft, it is the largest company on earth. So Apple currently, as we can see back here recently at the beginning of June, had hit its lows of about $170. And it went from its highs back here in March of about $213. And it just had this slide, as did most of the economy. Now, one of the things you can see that I've created is it had this nice little level of support right here through $170. We've seen levels of support kind of through here previously. You can definitely see where this acted as resistance, and then it continued to drop down here to 142 before really starting to get its momentum back. And this was late December of 2018. I think this was probably Christmas Eve, December 2018. Anyway, as you can see right here, this has really been able to create what I would call a very nice channel pattern. This right here is the channel, ranging from about $170 up to a high of about $206. Now, my first strategy, like I said, when being able to get out of a swing trade is I would get out right here at about $206. That is going to be my exit point. Again, your RSI is also going to be high at that point. Your MACD should be indicating with a blue upward line that it is still a buy signal. But overall, like I said, my reason for getting out is because this has been a tried and true strategy over and over and over again. Even if we go out here to a 1-day, 1-year chart, you are going to see here that basically Apple has kept this level or this pattern of highs, or using it as support, of $206. And then also being able to bounce and kind of hold support right down here. And this is over the course of the past year. This is a massive channel, basically a massive channel pattern. But I would like to play kind of the more micro channel pattern. And this, you guys, still is a very good gain on a pretty solid stock that is mainly influenced by what the markets are doing. All right, you guys, the second indicator that I want to talk about today that helps me decide if I'm going to be selling a stock that I've been swing trading is using the MACD indicator. Now, for those of you that don't know, the MACD is a helpful indicator that I don't usually place a whole lot of weight upon. It's usually a secondary or like tertiary or quaternary basically option that I use. I don't use the MACD as a primary indicator, but one of the things you can see, especially if we zoom in on this here and kind of get a little bit better chart idea, as you can see, the MACD is comprised of selling pressure and buying pressure, volume coming in. As it gets green here, you can see up here on the chart, you also see the price action increasing. Now also on the MACD, you're going to be able to see the turquoise line as that is above and crosses above the brown. That's when you start seeing massive spikes. That's where you see it being positive. Anytime this starts to curl, that's usually indicative of a crossover, and that is indicative of selling pressure. So one of the things as we zoom out here on NVDA or NVIDIA, you'll see here on the chart that we are starting to see a curvature. We're starting to see this actually tank down. I'll slide it over here a little bit more. We're starting to see where this is curling, and this is definitely not a place that you want to be buying. It goes along with the chart pattern that I was talking about in step one. You can see a very basic channel pattern here. If you were able to buy down here at 135 and sell up here, you'd be looking at about a 20% return on NVIDIA. And granted, you would have been missing out on about 6% because basically, if you take it from, we'll zoom in here a little bit more, if you take it from where we would have been getting out to the highs, yeah, you left about 6.3, 6.5% on the table. Now, is that always good? No, that's never good. But the reality is how were you supposed to know that this was going to spike to previous highs here at 170 before it started to come down? So there will be times where you will end up losing out and not being able to basically keep all of your profit on these, but being able to take it from here up to here and still be able to keep that massive profit, especially when your RSI is so high, this would be a good selling point because you're following that channel pattern. And again, like I said, this is starting to show based on your MACD indicator that there is some selling pressure going on. More red candles down here. The brown line is crossed or tan line is crossed above the turquoise line. These are all signs and signals that you do not want to be long on this stock, and you actually do want to be taking profits if you're swinging this particular company. All right, guys, the next indicator that I use to know that it is time to sell a stock that I'm swing trading is seeing multiple days where the stock is hitting the resistance. When it consistently hits resistance, that's showing that for multiple days it's not able to break out and break above the previous highs that it was seeing. Let's take a look at the charts. So this is actually going to be kind of an interesting example because Snapchat actually did end up having a pop. We're going to zoom in here. Over the past few months, Snapchat has actually ran quite a bit. It ran from lows of 482 all the way up here to highs of 1529. Snap has been probably one of the best performing stocks in the segment as of recent. So one of the things though that I would find very concerning for me if I was going to be long in Snapchat up at this point is that you're seeing a ceiling. You're basically seeing a level of resistance right here at about $15, and $15 has been previous resistance for quite some time. As you can see, it took one day, it stayed up here, it couldn't break 15, came back down, came up here another day, could not break it, and we can even zoom in a little bit more on here. You can see where it could not break $15, could not break 15, could not break 15, and just starts to trend down. I mean, it might not look like a lot to you, but boy, this is still a solid 5% swing on here. So you can get mini channels as well where companies are definitely possible to be swing traded in, a mini channel here. But this is the thing, is it's really starting to look ugly because you see the MACD crossing over right here. You're not really seeing it start to indicate an upward trend. You do see some more buying volume come in because of the fact that now Snapchat is showing that it has broke above the $15 price point. It will need to be seen if it can stay above the EMA line here, especially as it holds and consolidates above 15. But anytime you're back in here and you're holding Snapchat as a swing trade in here, this is a negative sign. This is a sign that you definitely do want to sell your current swing and get out because it's not able to break the previous high. That especially those whole dollar highs. $15 has been a level of resistance for quite some time for Snapchat, And so it's a bad sign, and you do want to get out as close to $15 as possible in this particular situation. One more thing I will add to that is during my swing trades, I love to look at the 180-day chart. The 180-day 4-hour chart is really my bread and butter for swing trades, especially longer term swing trades. Anytime that you can see where within the past 6 months, the chart is really topping out right around that same price point. Snapchat was topping out right here around $14, and it's currently well above that. We're currently seeing Snapchat around highs of 15. It just is a good indicator, especially in this channel pattern, that is a range of about 10 to 12%, that it's overbought, that it really is too high, and this is something that you do not want to be continually swing trading. Now, there is one more thing that really does play into this as well, and I'm gonna talk about that right now, because this will actually affect everything, and we're gonna talk about it right now for number 4. All right, now reason number 4 that you will need to use in order to sell your position is going to be if the market is in a slump or if the market is on a tear. Now, what I mean by that is when you look at the overall market, you look at the S&P 500, you look at the Dow Jones, what has the stock market been doing? All right, you guys, so taking a look at the chart on the S&P 500 or the ETF for the S&P 500, which is SPY, that's the ticker symbol, you will see that the SPY has been on quite a run. You can see obviously the pullback here at December of 2018. This was the pullback here as recent as June. That was quite a big little dip down here. And then we've seen it continually run, and we are sitting at highs right now. I think we are basically sitting at near all-time highs on the S&P 500. This is indicative that the market is ready for some sort of pullback. As you can see, even going back to the past 6 months, the market, whenever it has a pull up, it tends to pull back. There's usually a lot more volatility in the market, especially if we go, let's take a look at the past 3 years. You're still going to see a little bit more volatility going on over the past couple years, and we have seen quite a run up recently. This is a good indicator that it is probably time, if you are swing trading something and have been making money over the past few months, to go, we probably are due for an overall market pullback, not a big massive recession, but a correction. When you do see those kinds of things and there is some turmoil in the world news and those kinds of things, you need to be able to go, okay, this probably is a good point to sell, take my profits, so that I don't get caught as a bag holder when some negative news comes out and the market gets driven down. That happens all the time, and you don't want to be a part of that. Even when your technical analysis was spot on, market news can really affect those things. So I hope that was really helpful, you guys. That is my key 4 points that I use when I'm buying or selling a stock. If you found those things helpful, please remember to hit that like button, subscribe if you haven't already. Check out my course. I do have a course, link is in the description. I also have a private mentorship group that you are more than welcome to look into and potentially being a part of if you like my analysis on things. If you have any other questions, leave them down in the comment section. And I'm so glad you guys tuned in. Catch you guys in the next episode. Bye.